It's Thursday, November 5th. Welcome to MarketFoolery. I'm Chris Hill. With me today is Mr. Jim Gillies. Good to see you.
Good to be seen, Chris.
We've got some automotive news we're going to get to. We've got some social network news we're going to get to. We're going to start with the monster that is Mercado Libre, the Latin American e-commerce and fintech company. Second quarter profits and revenue solidly higher than expected. In fact, revenue up basically 150% from a year ago. And Mercado Pago, which is their digital payment system, is just on fire.
Yes, this is when I wrote my notes this morning on my other screen here, Chris, I did 3 words, 3 sentences, because each word required its own exclamation point, and that's essentially, what a quarter. This is a monster. Probably the best earnings report I've seen this quarter. Yes, gross merchandise volume, which is where it all starts for these types of companies, the amount of goods, the value of the goods that goes through their networks, up 62% in US dollar terms. And they were very clear about specifying there's a US dollar term and then there's foreign exchange neutral. So basically in the localized currencies. The US dollars had a strong quarter against Latin American currencies. So I'm going to, in an effort to downplay how great this quarter was, I'm going to only quote the US dollar denominated one. Okay, so gross merchandise volume, almost $6 billion US dollars goes through. That's up 62% year over year. Revenues, how much they got, how much Mercado Libre gets to take of the GMV, 1.12 billion, up 85% year over year as measured in US dollars. Mobile gross merchandise volume as a percent of total is 70%, and it was up, over 280%. Total payment volume, you mentioned Mercado Pago, 14.5 billion, up 92% year over year. Total active users for the quarter, up 92% to over 76 million people. Items sold up 110% to 206 million. Items shipped up to 188 million, which is up 131%. Year over year free cash flow, $766 million versus 272 in the first 3 quarters of last year. In fact, for this quarter, free cash flow, the cash that Mercado Libre gets to keep, to dispense with as they choose, nearly 300 million for the quarter, which is more than the first 3 quarters of last year combined. It is a ridiculous earnings report, and one wonders what happens. There will be a currency at some point where the US dollar will underperform Latin American currencies, okay? So I'm kind of wondering what's going to happen in that quarter. It might actually look better. I mean, but this is, and I'm a shareholder, and I'm a happy shareholder today.
All shareholders are happy.
All
today.
Shareholders are happy. Yeah, I mean, it's this one. I'm gonna blame this one on David Gardner years ago and his Rule Breakers team, who said, "Hey, you guys should buy this," and I said, "I'll throw a little bit of money into it." That little bit of money is no longer a little bit of money. So, David, thank you. The only fly in the ointment, because I always have to have a fly in the ointment for companies. In fact, I asked a colleague of ours this morning as he was shooting me details on another company that had a great quarter. I said, what is the one thing you hate about this company? Because I think it's valuable to always find the problems. And because if you can assess the problems, and if the problems are fixable, you can probably find something, as opposed to this could really derail the ship at some point. My biggest problem for Mercado Libre is it's not a cheap company. It's a $65 billion market cap. That's 19 times sales. That is pricey. But that said, with the growth that they just put at this quarter, with the results they have, you know what? That type of growth forgives a lot of sins, like 19 times sales. And I think a few more like this, and we'll be laughing at this price. So.
And it is, you just touched on the thing that I wanted to hit on, which is, it is a sign of how good this quarter was for Mercado Libre, that the stock is up 7%. It's hitting another all-time high, because this is not a cheap stock. And we've seen this earnings season, we've seen some stocks in this category. And what I mean by that is, coming into today, Mercado Libre had doubled in 2020, more than doubled. So it's not a cheap stock. We've seen other businesses in that category where it's like, well, they had a great quarter. The stock is flat or the stock is down a couple of percent. It was a great quarter, but it's like, this is a valuation thing. If they had any kind of stumble, we wouldn't be looking at a 7% gain. And again, this speaks to just how great this quarter was for them.
Yeah, I mean the best. I called this by so far the best quarter I've seen this earnings report or this earnings season. The prior holder of that unofficial title would have been Shopify, who had another monster quarter, and it was exactly what you've just said. Their stock, I think, was down 6 or 7% on earnings release date because they didn't match the expectations that the market had for them. In this case, Mercado Libre just torched every expectation, and good for them. But it's pretty crazy.
The shares of General Motors not hitting an all-time high, but they're moving higher this morning. And the story of GM's third quarter report is pretty simple. Trucks and SUVs, they sold a bunch of them.
And they hope to sell more. Exactly. I guess we're going from the sublime to the boring. And look, that's not pejorative. I am someone who thinks boring is beautiful when it comes to investing. It's revenues. I think we're about $35.5 billion, which is no growth year over year. But the way the accounting worked, earnings per share of 283 was way above expectations, nearly double, or if it wasn't also double. 65% up year over year, made a ton of free cash flow, about $9 billion, I think, year to date. And yet today, this is a $36 stock. And 10 years ago, this was a $34 stock. And that's I think the one tale before we get into trucks and SUVs. The one tale I want to tell is, this quarter, Chris, looked good. But take the camera and pan out. I mentioned, 10-year stock. The stock's gone nowhere, essentially. In 2010, so a decade ago, GM had $135 billion in revenue. And they are on pace in 2020. They're on pace this year to turn in about $120 billion in revenues. So, it's kind of like there's a reason this stock has gone nowhere. And like I said earlier with Mercado Libre, growth forgives a lot of sins. But no growth, which is essentially what GM has had, negative growth, if you will, that just compounds the sins. But, it was a good quarter in that history. So we'll give them credit for the day at least.
Absolutely. And depending on when you bought shares of this, I mean, we've seen this story with a bunch of other businesses in other industries where, hey, if you go back to the spring, sort of the depths of the spring, there were investors who looked at GM and said, well, that's just ridiculous that it's trading at $14 a share. Come on.
You've done well.
And it's like, congratulations, you're sitting on a double and then some. But, this has been the story with GM for a while, that they need to be able to string a bunch of these quarters together, and they just haven't done that.
And that is the key because, I am not a shareholder of GM. I have very little interest in being a shareholder of GM, even though I think it's relatively cheap here. I have no interest, similarly, in selling my shares of Mercado Libre because Mercado Libre has been stringing these quarters together, as you say, and GM just kind of like, well, this is a good quarter, but it'll be followed by a crap quarter, I'm sure, and maybe a middle-of-the-road quarter after that, and maybe another good quarter. The one thing I think I'm really the most interested in from the quarter is they are really hitting hard on their all-electric future. And I like that. You mentioned earlier that the strength of this quarter was trucks and SUVs. I'm a big electric vehicle fan, and I think that the electric vehicle revolution cannot get here swift enough. And so I like the fact that everyone and their dog is bringing out multiple models of electric vehicles, from the small everyday commuter cars to large vehicles, like GM has recast the Hummer brand as an electric super truck. And, they are, unlike other electric pickups I could mention that who have their windows break when you glance at them, I think they're going to I think this one's going to be a big hit for them. I think there are people who are going to line up for this vehicle, and I think as an environmentally themed guy, my background is environmental engineering. I love that they've taken a brand that among the environmental set is not thought of terribly well. I'll put it that way. That is the Hummer, and they're recasting it as an electric super truck. So I love that. But it's they are going for across the board more electric vehicles, small versus large. They're standardizing models around various drive units. They are going hard into this, and they're not the only one. VW, Volkswagen is doing the same. Toyota is going along more the fuel cell electric vehicle style, but also they've kind of got mastered the hybrid plug-in hybrid versions. So I mean, it's looking really good. If you are a fan of electric vehicles, if you are a fan of the environmental benefits of electric vehicles, I love where the auto industry is going, but it's not enough to make me buy this stock.
Death cannot stop true love. All it can do is delay it for a while. And the corollary in investing is that the pandemic cannot stop dating or short-term companionship, as evidenced by Match Group's third quarter report. Tinder subscribers up 16% from a year ago, and shares of Match Group up more than 5% today and hitting another all-time high.
So if we were to call this a trio of earnings reports, we've kind of got a Goldilocks. We've kind of got the too hot, the too cold. Now we got the just right one, with Match. Dating in a pandemic, aka don't underestimate humans' desire for connection. It's a pretty great report. Lesser growth than Mercado Libre, but also more longer-term sustainable growth, unlike our friend GM. Revenue up 18%, average revenue per user up about 4%, subscriber count up about 12. They essentially own online dating in the 21st century, in 2020 and beyond. They have a great suite of legacy brands. So you were talking Plenty of Fish, OkCupid, where I met my significant other a number of years ago. Of course, the Now brand is Tinder, and I mean, swipe right, swipe left, swipe right has entered the lexicon. I mean, we know what we're talking about. The only time I've personally been on Tinder is when a friend of ours decided that it would be funny if she let us make some choices for her. She thought it was less funny after the fact. But it was pretty funny, actually. But and they have the kind of the new brands coming out, or these things. The one app I think I find the most interesting is Hinge, which is it bills itself as the app. It's a relationship app. It bills itself to be deleted. So you mentioned maybe the short-term connection. I'm not too sure how you phrased it again, but which is
short-term
more
companionship.
Short-term, thank you. Yeah, that's Tinder's speciality.
Isn't that what Tinder is? Short-term companionship.
Yes, but Hinge is they're designed to be deleted. That's pretty cool, actually, because we always talk about businesses and you have recurring revenues and what have you. In the business of companionship or love or whatever you want to call it, a lot of people would like to not be repeat customers. I'm not looking forward to being a repeat customer. I'm quite happy to never use their product again for myself. So I think that's a really interesting and unique way of approaching it with Hinge, and of course they bought Hinge. I think that they've kind of got all the way down the dating spectrum, or how they're going to handle these things. They have an offering for everyone, and you look at them, it's hard to see who could supplant them. And then my favorite aspect of this quarter, or year to date, I suppose, quarterly revenue was about $640 million. Year to date, they're at about $1.74 billion. Year to date, they've generated $486.5 million in free cash flow. Compared to that $1.74 billion in revenue, that's a 28% conversion rate. So 28 cents of every dollar that they raise as revenue stays in their pockets to do with as they will. 28% is spectacular. And it's spectacular for a company that has no peer. No one's going to supplant them.
What are we all looking for? Well, to the point you made in terms of companionship, we're looking for different things. Some people
We're looking
are
at different things.
happy to be
times.
single.
Sure.
Some people are looking to settle down. What are we looking for as investors? I think we're all looking for the same thing. And what I mean by that is we would all love to invest in legal monopolies. Not illegal monopolies that are getting put under the microscope by the Justice Department, legal monopolies. And to your point, Match Group owns dating in the 21st century.
Yeah,
Who is their competition? And they are a $35 billion company. They're not some monstrosity that is going to get the attention of the Justice Department, like, we better break them up. It's like, no, they're a legal monopoly.
I mean, you've got Facebook dating. I know people who have met because they follow the same people on Twitter. But I mean, even if Facebook dating became a thing, and it's a thing. I mean, they have. It's a small portion of Facebook's revenue and their operations. So I mean, how dedicated is Facebook going to be willing to follow there? Match is it's a tragic story for me a little bit, Chris, because it's been one I've looked at for like at least 5 years, and always, especially both when it was under its prior parent IAC and now as a standalone company. I've always looked at it and said, I should really get to know this one. I should buy a few shares. I should really, and I've always said, the valuation's a little expensive, and it just. I've missed it. I've never owned it. I wish I had. It's a great story. I probably should go buy a few shares for myself just to partake, because it's a legal monopoly, and I don't see anybody supplanting them anytime soon. Which means the good results we had here, the just right quarter, to use the Goldilocks metaphor I taxed out earlier, the just right quarter probably is going to be just right for a good long time.
You own shares of Mercado Libre, so there's only so much sympathy you're going to get from me.
Oh, I deserve zero sympathy. Trust me. Zero.
Jim Gillies, always good talking to you. Thanks for being here.
Thanks for inviting me.
As always, people on the program may have interest in the stocks they talk about, and the Motley Fool may have formal recommendations for or against, so don't buy or sell stocks based solely on what you hear. That's going to do it for this edition of Market Foolery. The show is mixed by Dan Boyd. I'm Chris Hill. Thanks for listening. We'll see you on Monday.